Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views.
Hey, good morning. Wednesday, 12th of October, 2022. Hope all's going well out there. So September PPI coming in a touch above expectations, still very elevated. Really no change in trend. The largest month-on-month gain was in services, up 60 bips. That's a little concerning. That's kind of the thing that I think people are really worried about, is this thing's going to bleed into services. People are still traveling, going out, spending money. I don't see any signs of slowdown. Me myself, I was just on a golf trip with buddies over in rural Wisconsin. Plenty of folks there feeling good, spending money, having fun. So that's a problem. That's why taming this inflation beast is so difficult. Fed sees this report and they, first think there's too many people that still have jobs. Still too much discretionary spending out there. So it's a combination of getting folks scared enough that they rein it in and or less jobs in this country. So we will see. That's more of a time factor, unfortunately. So we're not there yet. Looking at specific stock news, Merck and Moderna teaming up on a personal messenger RNA vaccine for cancer. Moderna is actually up 12% on this pre-market. Pretty big move. One of the it sounds like very promising. I don't know anything about it. First time hearing about it, but a personal messenger RNA vaccine sounds really interesting. I don't know if that's diagnosing or taking a look at your own personal risk factors, and I have no idea. But very interesting to hear nonetheless. So one of the analysts on Moderna that's had a really good call is Michael Yee out of Jefferies. He sees value below 40 billion market cap. That's over 12% below the current price. Keep an eye on his moves. If he does decide to change his tune, something like this comes up, it's maybe a surprise, and he gets more constructive earlier than that 40 billion market cap, that could be an interesting sign for the stock itself. We don't own it. We're looking at it. We own Merck. That's probably one we buy more on dips, but there's plenty of shots on goal with Moderna. Very strong pipeline in terms of therapies with a proven technology in messenger RNA. Noted out of Deutsche Bank with using Bloomberg data shows consensus earnings estimates for Q3 down 7% now versus the start of Q2 earnings season. So estimates are coming down. Analysts are just taking them down, which is great. This is the largest move outside of the pandemic shock we've seen. This is what we need. This is absolutely what we need. We need numbers to come down. We need people to throw in the towel. It's over. They're not going to make the numbers. We're taking them down. This is all good. Over the medium term, over the very short term, likely not going to show much in terms of, if anything, it's going to show us the market's probably still too expensive versus a now lower forward E as that gets revised down. Over the medium term, very constructive to finding a bottom. Stocks will bottom before the final downward revisions are made. We've seen this before. Every economic cycle is the same deal. Look at the cyclical companies out there, whether it's semis, industrials, what have you, they'll bottom and trade higher before all these revisions are made to the downside. Now the big, obviously the crystal ball question is when is that? Wish I could tell you exactly when that was. Our guess right now, Q2 of 23, is potentially when that happens. You're going to see the thing to think about now and going forward, some stocks have bottomed. More stocks will bottom before the broad market. It's just why it's such an important environment for active management right now. But broadly, think about those stocks. Think about those downward revisions, and the ability for companies to eventually overcome those revisions that have been made too far to the downside, right? That's the magic. All right. Have an awesome day. We will talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.